Hello traders, this is Brian from FinancialTradingJournal.com and welcome to the first and hopefully not last FX weekly analysis in video form. Today is Saturday, June 1st, 2013. So considering this is the first video, I figure I should do an introduction first. So basically I release my FX weekly analysis every Saturday afternoon. This is done purposely to avoid analyzing while the markets are open. The four Forex pairs that I watch are the dollar CAD, Aussie dollar, Euro dollar, and pound dollar. I started writing these FX weekly analysis on June 18th, 2011, a couple months after I first started trading Forex, so it's been nearly 2 years now. All of the charts and forecasts will still be provided on my website. To access them, visit www.fxweeklyanalysis.com. While you're there, you can access my archived analysis as well. All of them are available for your viewing pleasure. So you can go back in history and find out what I analyzed and what I forecasted compared to what actually happened and whether or not they came true or not. But that's basically the introduction, so let's get started. So for those of you that have never seen my FX weekly analysis before, basically what happens is I start at the monthly level, then I zoom in to the weekly level, daily level, and H4 level, and I stop there. The colors are black is for monthly levels, magenta is for weekly levels, aqua is for daily levels, and H4 is red. Before we start, I just want to remind you that yesterday was the last day of May, so the May monthly candle across the board has closed now. Tomorrow is Sunday, which means the start of the June candle will start tomorrow for a new monthly candle. So keep that in mind when you're looking at the monthly charts across the board. So first up, we have the monthly chart of the dollar CAD. We had a green solid close above the weekly trend line that shows strong bullish action on the long-term time frame. There's nothing much to say aside from that. Something that I mentioned in last week's forecast or the week before that was we had a similar wedge formation in 2007. Similar to the big one that we have now. After it broke the weekly trend line, it went up. We're projecting something that might happen in the coming months up here as well. So that's it for the monthly chart. Weekly chart, zooming out. We can see that last week had this doji that I mentioned previously, that it could be either or for this week. This week it had a green weekly close above this. So that's a good sign for bulls. However, something to keep in mind is we have been going up for 4 weeks now. So there is a potential retrace that could happen soon. It could retrace back down to the weekly trend line as support since it broke it. It's resistance on the way up, on the way back down, it's support. So that's a possibility. On the daily chart, you can see that it already tried to retrace. It broke it on the 22nd, on the 23rd, it immediately retraced, and then even this week it went up to test new highs, so it made new highs, and then it retraced back down again. Didn't quite touch the weekly trend line, but it did touch a previously resistance level, as you can see right here on this top. If you connect this top to right there like that, this is the aqua line because this is the daily chart. This is a resistance level that was broken and became support right here. So that's a pretty good level. Technically speaking, the retrace already happened depending on what time frame you're looking at. Going to the H4 chart. H4 chart shows the upward channel broke. As I mentioned last week, it was getting weak because here it took 2 bounces to get up, 2 bounces to get up. But on the top side, it bounced, went down, bounced, went down. Here it got choppy this week, and then it actually finally broke midweek, and then now we're possibly something that could happen now is we might range. So a range could form something like, say, like this, or maybe like this, depending on how you want to draw it. This range could be forming before we make our next move up, because next week is the first week of June, so keep that in mind as well. The first and last week of every month is usually weird because traders are trying to close a candle a certain way and trying to open it a certain way. So this basically concludes the dollar CAD. I won't be doing the forecast in my commentary analysis here in the video format. Go to the website, all the forecasts and all the charts with their completed drawings will be there. So moving on, we have the Aussie dollar monthly chart. Aussie dollar, something that I've been mentioning in previous weeks, was this trend line previously in 2007-2008. After it broke, it closed a solid red candle, it continued down. Currently we're seeing something similar here in 2013. This was a monthly trend line right here. This is a solid monthly close. The only problem with this close is that we're still inside the range. As you guys can see from the magenta lines, this is the range for the previous 2 years. So it could potentially bounce. A safer place to close would have been below the 9.4 level, the 0.94 level right here. The lowest low ever in the past 2 years would have been at the 0.94. A close below that would signal a proper bear breaking out of the range. Until we get below there, this part I mentioned between these two magenta lines, this is empty space, so this is no man's land. It could either drop or consolidate inside here. It could also bounce here as well. That's a possibility, something I mentioned in previous weeks as well. Moving to the weekly chart, I have a Fibonacci line drawn to show possible retrace levels. I would not be surprised if we did retrace back up to the 1.01 level, which is right in between the 50 and the 61.8 fib levels. This is a possible retrace point. It would also be near the trend line to test it, but to test it, it would have to go all the way up to the 1.04 level. That's way too high. I don't think that's happening. Possibly 1.01 for a good retrace. That would be a great place to re-enter shorts for the bears. Bulls, I would say to be careful. You don't want to catch a falling knife because, as you guys saw on the monthly chart, it could just drop straight down from this point. So there's no safe trades for bulls. Bears, possible trades up there, and bears, possible trades down here. This is empty space in here. On the daily chart, nothing to comment on. It just shows how steep the drop was. If you were to draw a trend line connecting this, you'd get something that looks like that. Basically, you have this flat drop here, and I actually have this drawn on the 4-hour chart, so I'm just going to switch to that instead of looking at the daily chart. There's nothing to talk about here. It just shows zoomed in where the levels are. On the H4 chart, what you see is you have this drop here and then this channel line here. This channel has so far been respected this week and last week and the week before that. You have a bounce on the top here, here, and here. And you also have bounce on the bottom here, here, and here. Right now it's in the middle. It's also at support. You see possible pin bars on the H4 chart, so it could bounce up, assuming we don't make any more lower lows. But that is yet to be seen, so we'll see what happens in the coming week. Next up, we have the Euro USD monthly chart, which for the past couple weeks I have had nothing to say because this is just in the middle of nowhere. There's nothing to comment on. Last month we had this retrace up here. It didn't fully make it up to the weekly trend line, but it's a pretty good retrace nonetheless, considering we broke the weekly trend line and then we went back up. And then we went back down this month. We did test the lows and it bounced midweek, I think, mid-month. I'm not sure exactly when it bounced. We'll find out as we zoom in to the different time frames, but it bounced. So unlike the dollar CAD and the Aussie CAD, which had solid monthly closes, Euro USD did not have a solid monthly close, considering that the body was only 50% of the candle and the wick was 50% of the candle. So that's not a good close on the monthly chart, which is why I have nothing to say there. Weekly chart, you can see it's still stuck inside this range here. Let's just zoom out so you can see clearly how small this range is. This range has been going on for quite a while now. Technically speaking, this was voided in the middle here, so technically you wouldn't draw it on the top here like that, but the bottom is valid. This was valid from last year. This was November 2012 till now. This trend line has still held. It bounced here and here on a weekly time frame. I don't want to comment anything else aside from that. Let's just switch to the daily chart to see exactly how it has been bouncing. It took one bounce off that there. This was multiple bounces, multiple bounces. On the top you have one bounce easily. This one broke, ignoring this part here. This was one bounce down, multiple bounces. So multiple bounces on the bottom, single bounces on the top. That shows strong bears, weak bulls. So, but right now it's in the middle. Until it breaks outside of this range, you can consider it still ranging. So until it breaks outside of the range, I don't have a forecast for this pair yet, because it's in the middle of the range. It's no man's land. You don't forecast something if it's in the middle of the range, because it's 50-50. It could either go up or to go down. On the H4 chart, however, you have potential for going up, because this is a upward channel. similar to that upward channel over there. But if you look historically speaking, though, this upward channel, it broke to the top side there, showing signs of bull strength, but then it came back down immediately because this is, after all, this aqua line is the top of the range, so that's why it broke down. This one, however, is in the middle. So in the middle, all things considered, this is near the bottom. It broke the top H4 trend line near the bottom of the range, showing potential bounce possibility. So this, since this red line broke, it could go up. Going up, you would form something that looks like this. We'll just switch this color to red so that we're on the H4 chart. Forming something that looks like that, and you could draw, say, something that looks like this. If you mash the lines together, something that looks like that. This is a potential upward channel to move in the coming weeks. But like I said, this is in the middle of the aqua range, so I'm not forecasting on this pair. Lastly, we have the monthly chart for the pound dollar. Pound dollar, I mentioned last week, or in the previous weeks, what we wanted for this month was an engulfing bearish candle. We did not get that, so I'll just zoom in closer so you can see this red bar did not engulf the green bar. As you guys can see, the bottom of the green bar, there's a gap between here and the bottom of the red bar, so that's not an engulfing candle. Having said that, I wouldn't say that the bear is weak. It's just not as strong as it would like to be. But all things considered, though, it did manage to make a lower low compared to the last month's candle, but not as low as the previous pin bars candle. So moving on to the weekly chart, you can see that we did break the weekly trend line a couple weeks ago. We could potentially be reversing now to test the weekly trend line, considering we had a kind of doji-like candle last week and a pin bar-like candle this week. I say like because last week the body was about 33% of the candle. This week the body is also 33% of the candle. So typically speaking, with pin bars and dojis, you want 20 or 10% of the candle only for the bodies. So nothing else to say there. It could potentially retrace, considering you have a doji and pin bar on the weekly time frame. On the daily time frame, you can see a possible double bottom. So double bottom here, one here and one there, for a possible bounce up. Maybe we could test this level, the 1.532, or maybe possibly 1.54. I would say is capping it, because this is resistance right there previously. I don't think we're gonna hit the 1.56. The 1.56 was previously the 50% fib that I had drawn in previous weeks. If you draw a fib line something like this, the 50% fib was up here. Up there, it consolidated for about 7 days. As you can see, count the number of wicks that it touched up there. That's how long it consolidated up there before finally breaking down. So the 50% fib held in the long term. Possibly it could be forming a new trend, so that the bounce point would be somewhere around here, which is the 38.2, which is coinciding with this resistance level. That could be a potential retrace level to reload shorts. So let's just get rid of this fib. And then moving on to the H4. The H4, it did break this channel. It broke the channel. As you guys can see, it bounced on the top here 1, 2, 3, 4, 5, 6 times. So 6 times, that's more than 3 or 4 times. So usually 3 or 4 is the general rule for breaking trend lines or channel lines. Since it broke that, but also something that's forming now that's kind of conflicting with the daily and weekly time frame of the retracement that I'm talking about, is you have a bearish Gartley. So let's just draw that real quick. And this is actually pretty textbook perfect in terms of what it looks like. The only not perfect point is the fact that, and actually it depends on how you draw. You could wing it and do something like this instead, and that would be more accurate. But drawing up there is fine as well. This just shows bearish Gartley, high, lower high, and it could be skewed. And since considering it already broke downwards this way, short-term H4 shows a possible downward movement, while daily and weekly shows a possible retrace up. So I would say this is one of those confusing forecasts to make this week. But that basically concludes this week's FX Weekly Analysis. For the people that have been following my FX Weekly Analysis since the beginning, be sure to let me know what you think of the new video format. Also, for the new people that haven't followed me yet, let me know what you think as well. Go on my website, compare the written form to the video form. I understand the video form is probably going to be about 15 minutes long, compared to the written form is only a few paragraphs. So let me know which one you prefer. I know that one's quick and easy. Just read it, you know what it is, look at the charts, done. The forecast and the charts will still be posted on the website. I just won't be writing that small little blurb. It's just me talking for the most part from now on. So that's it for this week. Hope you guys enjoyed it, and I will see you guys back next week, next Saturday, for next week's FX Weekly Analysis.